Cut your losses in half by using these two TradingView indicators I'm about to show you in this video. These tools are so accurate that they barely lose a trade. I've done a backtesting on the Solana 5-minute time frame, and the results were shockingly good. The strategy wins 8 times out of 10, even in short time frames like 5 minutes. I can only imagine what it can do in longer time frames, where market manipulations are less frequent. The strategy's drawbacks are minimum, which confirms that it is safe to trade with and profit consistently. Want to learn how to use these indicators like I do and potentially get the same results? Watch this tutorial till the end and hit that subscribe button if you haven't already. Let's dive in. What sets these indicators apart is their ability to accurately read the price chart and give traders the real picture of the current market state. This is crucial as most TradingView indicators are lagging, which means they are not predictive, but are instead used to confirm trends already established in the market. Additionally, these indicators analyze price action from different angles, allowing you to see the bigger picture and make better decisions. I will show you how to install these tools with the exact same settings at the end of the video. In this part of the tutorial, we'll discuss how each feature of these tools gives you an edge in the market. Learning how to read these signals correctly is something I really want you to focus on. Let's start with these trend lines with breaks. This functionality is based on the construction of trend lines that connect two significant points on a price chart, highs or lows. The breaks in these trend lines are crucial events you should watch for, as they can signal a potential change in the underlying trend. The indicator assigns a number to each trend line based on how steep the slope is. The higher the number, the steeper the slope. Typically, a break on the steep trend line has a better probability of trend reversal. This is due to the fact that the price is overextended. These trend lines also have fake breakout protection in the form of a thick, barely visible cloud. This innovation increases the winning ratio and adds an extra layer of protection. Trend lines can also be used to spot accurate trade entries in an ongoing trend. When a security trends upwards, the price makes higher lows. The indicator connects these lows to form a bullish trend line which can serve as future support. Buyers often wait for the price to retest the trend line to initiate a long position, which leads to trend continuation. For safer entries, the indicator also comes with a multi-time frame momentum dashboard, the second crucial feature. The multi-time frame momentum dashboard is a sophisticated trading tool designed to give you a complete overview of the market's momentum across various timeframes, all within a single, easily interpretable table. This dashboard is particularly useful for those who incorporate momentum and trend-following strategies into their analysis, as it allows for a quick assessment of the market's current state and potential shifts in momentum. The dashboard is organized into columns, each representing a different time frame. These can be customized in the inputs. Each cell within the table displays a momentum score for the corresponding time frame. This score ranges from 1 to 99. A score between 1 and 40 indicates that the asset is experiencing bearish momentum in the specified time frame, indicating downward price movement. Lower scores within this range signify stronger bearish momentum. Scores within the 41 to 59 range indicate a lack of clear momentum in either direction. This could imply a consolidating market or a potential transition phase between bullish and bearish trends. Higher scores between 60 and 99 signal bullish momentum, with the asset likely experiencing upward price movement in the specified time frame. Scores closer to 99 represent stronger bullish momentum. You can use the dashboard to confirm trends across different timeframes. For instance, if an asset shows high momentum scores across short, medium, and long-term timeframes, it might indicate a strong and consistent bullish trend. The third indicator feature that will be used in this strategy is volumetric order blocks. Volumetric order blocks can act as strong support or resistance levels. A bullish block might act as support, suggesting a potential rebound area. while a bearish block might act as resistance, indicating a potential area for price reversals. In the strategy I'm about to show you, order blocks will act as signal filters. For instance, a buy trade cannot be initiated if the price is near a bearish order block. This is simply because the odds of the market reaching the profit target are heavily against you. Speaking of profit targets, this indicator gives clear buy and sell signals with algorithmically defined targets based on market volatility. The reason there are more than one target is to give traders an option to take a part of their position off every time price reaches one of these targets. This way of trade management decreases risk and eliminates the human factor. So, these are the features of indicator number 1. The second tool involved in this strategy is significantly simpler. This is a technical analysis tool that visually represents the current trend in the price of an asset by drawing two parallel lines on a chart. These lines form a channel that encapsulates the price movements of the asset over a specified period. The upper line of the channel connects the high points of the price, serving as resistance, while the lower line connects the low points, serving as support. This indicator is widely used by traders to understand the market direction and volatility. In simple terms, an ascending channel indicates a bullish trend. A descending channel indicates a bearish trend, and a horizontal channel suggests a consolidating market. Now that we've determined our indicators, let's discuss the exact conditions for opening buy and sell trades. We'll start with a long trade. Before initiating a long trade, check if the following criteria have been met. First, the trend channel is ascending. Second, the indicator issues a buy signal or a trend line break signal. Third, market momentum in higher time frames like daily, 4-hour is above 50. Fourth, there is no bearish order block below or at the first profit target. You can also add a rule to buy only near the lower trend channel band, but this is optional. Set the stop loss at the recommended price. Once the market reaches your target 1, adjust the stop loss to break even. Move the stop loss to target 1 once the price reaches your target 2. Close the trade when the price triggers your final target. Let's look at another example. Here, a bullish break serves as a buy signal. All other conditions remain the same. When shorting a stock, do the exact opposite. First, ensure the trend channel is descending. Second, wait for the indicator to give a sell signal or a trend line break signal. Finally, look for high time frame market momentum. It must be below 50 points. Also, ensure there is no bullish order block below your entry price. Follow the exact money management rules as for long trades. In the final part of the tutorial, I'll show you how to install and set up the indicators for this strategy. Open the indicators and search for Adaptive Trend Finder. Pick this one by Julian Eche. Open the indicator settings and change the channel to long term. The second indicator is an invite-only script. It's called the TradeIQ Toolkit. I'll leave the link to it in the video description. Once you've installed it on the chart, open its inputs and perform the following customizations. You'll need to enable two-touch trend lines with breaks, order blocks, signals at high frequency, with a filter and a trade multiplier set at 4. Once you're finished, click OK. Test this strategy on a demo account, and if you're happy with the results, trade with it in the live market. Happy trading!